Hey guys, welcome back. Patrick here. In this video, we are going to review Momentus. That is going to merge with a SPAC Stable Road Acquisition, ticker symbol SRAC. This is the fourth installment in our deep dive on the space SPACs. This is an industry that should grow over the next several years, and also there's the ARK ETF coming out soon dedicated to the space companies. As far as I saw, it should come out on March 30th, which is tomorrow, so that's going to be a big deal. Now is a good time to at least look into the industry and see if there are some companies that we want to keep track of for the future. All right, so all these companies are trying to solve the same problems using different solutions. The goal is to bring payloads into space, which are going to be satellites and constellations of satellites. So you have companies that we've reviewed before, like Rocket Lab and Astra, that are focusing so far mostly on smaller rockets. They want to go small and be precise. Now, at the other end of the spectrum, you have companies like SpaceX that are trying to go bigger and bigger and deliver more payload into space, and by doing so, they want to lower the cost per unit. So between all of them, you have Momentus that is using a different business model, which is the last mile delivery. What they want to do is not send their own rockets into space, but they want to piggyback on SpaceX's flights mostly, right? And then once the rocket's in space, they get their little shuttle thing, which is called the Vigoride, out, and they use their propulsion technology to bring the different satellites in the correct orbit and inclination. So that is the value proposition of Momentus. We're going to talk about it a little bit later in the video. But the basics of the transaction is that they are going to receive $310 million after the transaction. Apparently, it should be enough to for them not to need to raise more capital after that, and they were valued at $1.2 billion. Now, very important is that this was the first space SPAC to come out, and of course you guys know how the market was at the end of the year last year. This is a company that had a lot of excitement around it, a lot of enthusiasm, and went way too high, and now it came all the way back down. So now it is much more affordable than it was before. Let's get into the details and see if it's actually worth investing in. So the company's entire value proposition is to be the cheapest option to bring your payload into space. So that is what they're focusing on right now. It is a fairly narrow focus. They're not trying to do their own rockets. They are really working on their propulsion technology, the Vigoride, and then the successors to that. So the way it works is that they're going to work with third parties such as SpaceX, right, on the Falcon 9s. They're going to ride on it, and once it's in space, they're going to use the Vigoride to bring it to where the different satellites need to be. But they are going to be agnostic when it comes to launches. So for now, they have an agreement with SpaceX, but it doesn't really matter which company wins that race of bringing the most cargo into space and lowering the cost, because Momentus is going to benefit from that. As long as that company that does the launches offers ride shares, well, Momentus can hop onto it and actually charge their customers more than what Momentus pays to get on the ride share. So they're going to benefit from that spread between what they charge the company and what they're paying the provider, such as SpaceX. And then you have other companies, though, in the future, like New Glenn or whoever else develops these bigger rockets and lowers the cost. As long as they have ride shares, Momentus can benefit from that. All right, so this is what it looks like. If you were to do your own small rocket, it would be 70,000 per kilogram. If you did your own ride share and then brought it to orbit yourself, it would be 50,000. And if you use the Vigoride, well, then you bundle your satellite with others, and that lowers the cost of each unit. And that would be 15,000 per kilogram. So that is really their value proposition, is to lower the cost by bundling different satellite providers together. All right, so if you look at the race when it comes to bringing the biggest rockets into space and the most payload, that's really at the benefit of Momentus. The lower the cost of this payload, the bigger the spread between what they charge their customers and what they're going to be paying to these providers. So you have the New Glenn in 2021 from Blue Origin, that would be $1,750 per kilogram. And then you have the Starship from SpaceX, which I've seen different numbers. In the previous presentation, it was $500, and this one is $250. And Elon has mentioned $100 per kilogram at some point in the future. So you can kind of see that over time, right, their margin might actually increase because they're going to pay much less to bring their Vigorides into space. Imagine if on this Starship rocket, you have 5 Vigorides with 7 satellites in each of them, well, that is going to be much more profitable for Momentus than if they were to send out their own rockets, right? Which would be much more expensive, and they would have to do a lot of R&D and everything. They are really benefiting from the efforts of third-party companies. So that's kind of smart in one way, right? And then you have the product roadmap. So this is the Vigoride we were talking about. So this can bring 750 kilogram into space. But over time, they have other projects. So this is going to be the next version in 2022. It's going to be bigger. And then in 2024, it's going to be their big boy, the Fervoride, which is up to 20,000 kilogram. And, you know, that's the thing, is that right now they're just going in low orbit, but over time they want to go deeper in space. They want to go to the moon and everything, right? So they have the asteroid and moon mining. They want to do energy and data processing. So I guess some sort of network into space. They want to build things into space. So they have a lot of different opportunities in the future if the company is successful, and they are going to do that with their own propulsion technology that they invented, which is all based on water propulsion, and apparently is one of the cheaper propulsion models. I'm not a mechanical engineer, so this is not my area of specialty, just to let you guys know, right? I'm just reading this like you are. If you guys are mechanical engineers and you really know a lot about this, let me know in the comments. Tell me if this water propulsion is that much better than the other ones. I would appreciate it. But that's basically what this company is about, is they're trying to piggyback on others to deliver their own services. Now that has some pros and some cons. The pros is that it lowers the cost, but of course the negative aspect of it is that they really depend on other companies. Another positive for Momentus compared to some of the other SPACs is that as of them making this presentation, they had $90 million worth of signed contracts. This is fairly good because it does mean that there is a demand for their product. Now, they're also talking about 1.1 billion in pipeline, but at this point with the SPACs, we all know that, especially with this industry, which is fairly new, and we can't really know what to expect, well, let's call it a pipe dream instead of a pipeline. We really don't know if it's going to happen, so it's a lot better to just focus on what we really know they do have, which is those contracts with a lot of different customers. Now, their projections are a little bit ambitious in my opinion. They think that they can do 5 missions in 2021, but this is already uncertain. There's a lot of delays already. So we'll talk about that in a minute in one of the negatives surrounding the company. Now, in 2025, though, they think that they can do over 100 missions through their different business components. So the space transportation, satellite as a service, and in-orbit servicing. If they can manage that, then the company will be successful and it will be a good investment. But there's a lot of uncertainty around this company, as you'll see in a second. And so according to them, these are their projections: clear path to profitability and over 1 billion in positive EBITDA. We really don't know if that's going to happen. All we know is in 2021, they project 19 million in revenue, and this would be a 682% increase in 2022 to 152 million. And then finally, in 2023, they would become positive when it comes to net cash flow at 129 million. And look at these crazy numbers. I mean, if we follow their projections, in 2027, they would make 1.9 billion in free cash flow, which would make this company severely undervalued right now and one of the best companies to invest in at the moment. But is it real, or, as I was saying, is it a pipe dream? All right, so I highlighted some of the positives for the company, but now we have to talk about some of the risks and uncertainties, because there are plenty with this company. The first of which is the leadership team. So this company was founded in part by Mikhail Kokorich. He is Russian, and sadly, that's causing some national security concerns for the US government. And because of that, the Momentus founders to divest shares after Defense Department concerns. So they were supposed to have a mission in January on a Falcon 9 mission, and now that was canceled. So Momentus said January 4th that it would not fly on that launch because of delays in getting approval from the FAA. They want to do it in June, right here, but they still said that they might not get approval by June, right? So that might be delayed too. So this is one clear risk for this company, is that this is setting them back by months and months and months, and especially since their technology is not really that well proven, well, it gives a lot of time for other companies to compete with them, especially because their moat is not that big. their main component to their business is their water propulsion engine, which, as I said, I totally admit I'm not an expert in that. I can't tell you how important that technology is compared to the alternatives. One of you guys might be able to tell me, but there are other companies that are going to be able to compete with them. You have Rocket Lab, which we've reviewed before, that has their Photon program, right? And that is going to be exactly the same thing. So they're going to use their own rockets to bring the satellites into space, then they can deploy the Photon satellite bus family and do other missions with it. So this is, just from Rocket Lab, but you have other companies that can do that too. SpaceX has all the technology to do exactly what Momentus does, right? The only benefit for SpaceX is if they think that this is a too small niche for them and they don't want to really pay a lot of attention to it. But if it does grow into a multi-billion-dollar industry, nothing really stops SpaceX of doing it themselves and just locking Momentus out. And that is one of the big downsides to relying entirely on another company. So I want you guys to pay attention to these risks. If you don't think they're too important, then no problem. Keep investing in Momentus. But I do think that these are some pretty important risks to take into account compared to some of the other companies in the industry, especially Rocket Lab, which you guys know from my other review that I think has the complete package so far. Alright guys, I'm going to wrap up to the video where I want us to talk about the valuation for this company, and then I want to rank the 4 that I've reviewed so far for your enjoyment. So first, the company right now is worth $1.82 billion. That is at the current share price of $14.12 after hours. Now this company is very special because way back in February, it peaked at $29.18. So far, it has lost 50% of its value due to the big SPAC attack that we're in the middle of. Recently, over the past few days, with a big anticipation of the ARK Invest ETF, it has started to recover a little bit. We're not exactly sure how that's going to pan out, right? It is a lot of speculation, and we still don't know when the company is going to be merging. I think that the big problems with the leadership is causing a lot of delays and uncertainty around this company. So, it is going to probably help stabilize the share price in the short term, but there's still a big question mark for this company. So this is a matter of interpretation, right? This is my opinion. It's my list, so don't be mad at me. It's just the way I like these companies. I would rank Rocket Lab as number 1 right now. I would rank Ast SpaceMobile as number 2 in my opinion. And the big reason for that is that I see Ast SpaceMobile as very high risk, but high reward. So they're all spec plays. But this one, if their technology works, which we don't know a lot about their patents, but if they can be successful, this company is going to make you a ton of money. Astra, I would put as number 3 so far in the list. The company has some contracts already, right? They won contracts over Rocket Lab, over SpaceX, and over Momentus from NASA. So Astra is still, not really that well established, but they have a lot going for them too. So I would put them at number 3 just because I think that Ast has more upside potential if everything goes well. At number 4, I would put I would put Momentus. In my opinion, it's the most risky of the 4. It's the one that I don't like as much. So if you guys are in love with this company, let me know in the comments why you think I'm wrong. There's no problem if we disagree, but that's my ranking for now. So I'll see you next time with Black Sky. Thank you guys for watching.